in an ever-changing environment. We're very excited to have Lou on the call today, Bongiovanni, an expert, really in the subject matter. I was joking with Lou. I was working on my PPP last night, and of course, it changed again, or may change again. So I think today's a very timely topic. Very excited to have Lou on the call. And I'm going to turn it over to Vicki Clark, our Executive Director, to introduce Lou. Thank you, Vicki.
Well, thanks, Doug. I don't really have much else to add, except, welcome everybody on this Friday, May 29th, in the days of COVID-19. We're really excited to have Lou with us today. Fitzpatrick, Bongiovanni, and Kelly, a CPA firm in Marmora, has been a longtime friend of the Chamber, and Lou has presented many seminars and now webinars for our Chamber membership over the years. And we're just really happy that Lou is sharing his valuable time with us here this morning. And, I was saying to Lou before we got started, Chambers of Commerce as 501c6 organizations are not allowed right now to apply for PPP. We have an application ready to go if the Congress allows chambers into the program. We are very hopeful that they will, because that would certainly be of help to us. So we appreciate all of you who have answered our call when we've asked you through our action alerts to petition Congress to let the chamber into the program. With that, I'm not going to say any more. Give our valuable time this morning over to Lou. Lou, thank you, and the floor, as they say, virtually is yours.
Okay, great. Thank you, Vicki, Nina, and Doug. Glad to be with you this morning, and I want to thank Congress for passing that, or not Congress, really, the House, for passing a lot of legislation and potential changes to what we're going to talk about today. And rest assured, I'll cover all of that as I'm going over the presentation. So this will be literally up to the minute here, because presentations like this, with the changes happening so quickly, tend to have a short shelf life because things get overwritten and stuff. So, we've come to learn in the last 2 months or so that any things that get passed are kind of written in pencil, so to speak, there, and can be subject to modifications, and to some cases, and in some cases, wide sweeping modifications to particular businesses to the tune of tens to hundreds of thousands of dollars. So it's really in everyone's best interest to either stay on top of it themselves, which is kind of a full-time undertaking, or make sure you're plugging into someone who is keeping their eye on this, because things change quickly and sometimes dramatically. So assuming everyone could see my screen, I put together a quick agenda. We have about an hour together here, so I want to make sure that everyone, we cover as much as we can. So this is kind of how I was thinking to break out this hour, is the first part, talk about the actual PPP loan forgiveness application. So there's an application that came out about a week ago, issued by the SBA, that says this is the formal document that needs to be completed in order to request a loan forgiveness. So we're going to go over that and just the general mechanics of it. Second, we've developed a planning tool to help small business owners as they're going through this covered period, this 8-week period, as far as trying to help them plan in order to maximize getting the forgiveness. I will share that tool with you. If you're interested in getting a copy of that tool, since I just don't want to send it out mass, because as I mentioned a minute ago, things are changing so quickly. So I wouldn't want an old version out there and people relying on an old version and a new one coming in. My email is right here, louB@fbkcpa.com. If you're interested in getting that, and also if you're interested in my periodic group emails here, just let me know, and I'll be glad to add you onto my group emails. And as a courtesy to the Chamber, I will forward this tool to you, understanding that it's subject to be updated for sure. Third thing that we'll cover, and this should take about 10 minutes or so, another tool that we developed, which is a cash flow forecasting tool. Some people have been very fixated on the PPP application originally, and now the forgiveness calculation, that it's very easy to lose sight of the fact that this loan is a vehicle to help business owners manage through this process in the short term, but also to help them transition into hopefully what becomes normal again in the more intermediate or long term. So this tool helps give some insights as to helping business owners do that. So we've been using that with our clients in conjunction with the forgiveness tool, and it's been very helpful to use this tool. So I'll show you that as well. Fourth item is talk about the new legislation, and I guess it's not formal legislation. It's the proposal passed by the House. I want to take some time and talk about that because there's some major changes there, and then we'll leave the balance of our time to questions and answers. By virtue of just a quick background on myself, been in practice for over 30 years, do tax work, but the last 10 years of my practice have been focusing on outsourced CFO services. So that's why you see the CFO on demand. So this falls very nicely into offering those type of services for business owners over and above just the conventional tax. So this is the angle in which you'll see I'll approach this. So it's not going to be strictly, tax or things of that nature. It's from a more holistic business approach is what you'll get here for this presentation. So let's get started because we have a lot to cover. So as far as the application, and you can get this application on the website over at the SBA website. You may have seen it. It's a short 11-page application. I say that tongue in cheek. There is instructions there as well as the actual application itself. I'm going to run through this rather quickly. This wasn't intended to be a how-to to that degree. So I'm going to hit what I think are important points. If I miss anything, again, feel free to chime in with the Q&A. And if something's really specific to your situation and you want to email me on it, you're welcome to do so. I'll be glad to help you out in that respect. So again, this is 11 pages, and what they indicate here is what's included in this 11-page packet here. It's the actual calculation to determine how much is forgiveness, and then there's a worksheet or a schedule and a worksheet to support it. Item 4 is more for demographic studies, so that really is not a necessity. What they do on the first page or two is define terms here, and I'm obviously not going to bore you with that. You'll hear me using terms like covered period. That's basically that 8-week period. They've kicked around 12 weeks. I've heard 16 weeks. Right now there's 24 weeks being proposed, so they're all over the map with it. I think it suffices to say that covered period is going to be extended, and that's great news for business owners across the board because that was one of the big challenges, and I recognize I'm speaking to the Cape May County Chamber, which has a fair amount of seasonal businesses representing them. That is critical to keep an eye on what this covered period is going to end up being. But right now, I'm going to give this presentation on what the law is today because we don't know exactly what it's going to be, but I'll make mention there when we go further as far as what could potentially change. Another big change here or clarification, I'll call it a change because it really didn't exist before, was this alternative payroll covered period. Again, in this 8-week period, you have payroll that you're going to pay out, and it's critical as far as what that is. They've loosened up the period of time. It was thought that it was very strict as you got it on one date and 56 days later it ended right there. It's not as much of a hard start and a hard stop as initially presented. I'll talk a little bit about that, but that's great news as well. And I'll make sure we talk about alternative payroll covered periods here. If you borrow over $2 million, then you're sure to be looked at a higher level of scrutiny. This is administered through the banks with through the SBA program, but this level of request for forgiveness is issued to the banks, and the banks looked at it through criteria that the SBA has given it. That's what you see here. But then there's going to be a higher level of audit or scrutiny if you borrow over $2 million. Okay. Then they go through the line-by-line items here, which I'm going to spare you and kind of do a quick down and dirty version of it. Some of you may be more versed in this than others. It really is not going to be a requirement until your 8-week or covered period time period is done. But just to at least get you familiar with the application, I think would be helpful as far as just covering a couple minutes to do that. So the application here goes over the standard, your name and things that there. Nothing here that really should be too difficult to answer. Then they get into the calculation. My tool is going to go over this in more detail and what I think is laid out in a more logical way. This is strictly a reporting tool, right? You're giving this to the banks and the SBA in order for them to determine it. So it's really not intended to be interactive. This is kind of an after the fact. Here are the numbers in the boxes. It computes. You're forgiven this amount, and it's a done deal. Well, that doesn't help you along the way when you're trying to strategize and plan here, so that's what the tool will do. But this is ultimately what needs to be completed, which is you indicate the payroll over this 8-week, again, I'll just keep on referring to it, 8-week cover period. You'll also indicate the mortgage interest. There's other interest that gets included there as well. Rents and leases on real and personal property. That's a change that was done. Utilities, and we'll talk about utilities. Transportation's in there, and I've gotten a lot of questions on that. We'll talk about what that means exactly, at least to what we know what it means right now. That may change. There is a further reduction if you reduce people's salaries or payroll. There's been a lot of confusion about that line item here. I'll drill down a little bit more about it in a second. And then there's a subtotal. They look at how many full-time equivalents or FTEs that you have at a certain date, and that date's June 30th. And based on that, magically you come up with a forgiveness number, and you compare that to what the loan was, and then it's the amount that you're forgiven is determined here. So, right, so everything starts out as a loan. So you have $100,000 you got from the PPP. That is presumed to be a loan until you fill out this application, which happens, you have 6 months after your 8-week window to have this not only filled out, submitted, and determined. So you don't really have 6 months to do it. Afterwards, you probably have 2 months, I would think, to do it. And that's where this is determined. So if you receive, let's say, a $100,000 loan, and through this, $70,000 is forgiven, that's determined here. You submit it. They being the SBA through the banks determine whether or not they agree with your request, right? This is an application. This is, so they determine how much, if you should be forgiven. If you have 70,000, let's say that's the number. And then once they bless it, then they modify the loan. And now your loan is only 30,000 in my simple example. Okay, so that's the gist of this application here. These are things that you're certified and you sign. Further applications, these are worksheets to support that application. This is where you get down to the actual numbers, where you're putting the cash compensation, the average number of full-time equivalents, that's the number of employees during that 8-week window, any reduction to payroll. And this works you through a table that's not fillable, at least the version that's floating out there is not fillable. You would do that, and then you would incorporate things such as health insurance that the employer pays, retirement, small amount of state and local taxes as well. And all that comes into computing payroll costs, right? So this is kind of the worksheet. And again, my tool will go over it in more detail. That's why I'm kind of flying through it here. I'm just kind of making points of reference more than trying to explain line item by line item here with you. There's a lot of questions that I get concerning the business owner. If I'm an LLC, how's that work? If I'm a shareholder of a corporation, how does that work? I'm a sole proprietor, how does that work? I'll address all that on the spreadsheet, but that's where this line item all comes to play. And there's actually a worksheet that addresses that too. All right, full-time equivalents is head count here. How many people are were in your workforce during a certain designated period of time, which I'll talk about, versus the period of time of this cover period. This 8-week period is very critical as well. So we'll talk about how many full-time equivalents you have, and then they do a quotient here in order to figure that out. Again, the spreadsheet will talk about it in more detail, more definitional stuff here, more reduction calculations, and then we get to what's fillable. Now, if you have an outside payroll service, this is where you're going to ask them, and most of them have gotten this request for sure, as you can imagine, to give you schedules that you could just say, see attached here. And you're going to put in payroll report schedules here in order to help you. So these are for employees who make under $100,000 a year that you have in this schedule, and this is for over $100,000 a year would be listed here. So you want to say see attach, and attach payroll reports, and you're good. All right, here are just some other guidelines, which we'll go over in a minute, and some more definitions, and that's your fun 11-page application that you'll need to complete, and add attachments. And I do want to take a second to talk about, where's that? Sorry about scrolling there. There's one part where it says what you have to attach. I think that's all the way at the top. There's a section here that indicates what you need to attach with all this summary. Sorry, let me just find that. Come on. Here it is. Documents you must submit. So it's right here. I was right there. All right. So these are the things that you must submit. The payroll records, like I said, get a payroll service to do that for you. They'll also cover the FTEs, most likely, if not a simple spreadsheet. And I'll show you what we have here with that. The non-payroll costs, the mortgage interest, the rents, and things of that nature, they're going to want bank statements. They're going to want canceled checks or verification that you actually paid it, as well as a list there as well. So these are things that you'll have to attach to this 11-page application. And then here are certain things that you should have as documentation, but you don't need to attach. And I won't go too deep into it because given our time limitations, I don't want to take too much time in order to do that. Okay, so next, let's go to the loan forgiveness tool that I was talking about here. All right, so this is our kind of homegrown tool that we put together. And really what we did here is we tried to incorporate, and this predates the actual application. And what we tried to do is create a planning tool so as business owners go along the way, they can monitor how things are progressing there, right? Because you don't want to wait until the end of the covered period, that 8-week period, and say, oh, geez, I wish I paid more payroll, or I wish I did this, or not so much and such. So you want to be able to see that along the way. So as far as this spreadsheet's concerned, there's a lot going on here. Anything in yellow you can modify. So in this, I'll just go with the example, and these are just made up numbers here. Let's say someone received their loan on May 7th here, and that's the date you actually received it. And 56 days later is July 1st, and this just computes it. So if it was May 4th, it would just compute it there to that period of time. So at first it was thought that was a hard start and a hard end, and it's not as hard of a start and end as now we know. So that's the first thing you want to keep on your radar and be aware of. Then as far as full-time equivalents, you have two reference periods. You could either look at the period February 15th of 19 to June 30th of 19, or the period January 1st of this year, 20, to February 29th of 20, and determine how many average FTE you had during those periods of time. Now, I just have 15 and 15 here, but you'll need to calculate that. We do have a calculator here to help people out if they want to use it, because most likely the SBA is going to want to see how you calculated these FTEs during this reference period. So here's the January to February one. Depending if your payroll's weekly or biweekly, you can indicate it here. And then here would be the number of hours during this period, and then the unnumbered hours here. And what they do is they take the lesser of the two periods of time. So in this case, I just made some changes here because the numbers were both 15. During this period of time, it ended up only being 13.5, and you can have fractional amounts here versus 15. So it takes the lesser of the two. Well, here it rounded, but it's 13.5. It takes the lesser of the two, and it compares it to the number of FTEs you have on the payroll that covers the date June 30th, 2020. Now, this may change with what the House passed, so I'm going to make a note of that, because if they push that date out to more than 8 weeks, they may change this date, and they most likely will. But right now, this is what it says. So you would look at this cover period, this you know today, right? Because you would go back and you know that. And then the key is, depending on when you get in here, this just happens to neatly cover the, this June, or come up to this June 30th period, is you need to make sure, in order to maximize it, that you have at least, in this case, 14 full-time equivalents on that payroll. You can have lesser amounts leading up to it or more amounts, but all they care about is how many FTEs you have on that payroll. So that's one planning tip that you need to understand very clearly, because that is critical to this calculation. All right, because if you have less than that, let's say you only have 10 FTEs, then your percentage goes down. See here, when you have your 14 in this case, it's 100% of the payroll gets forgiven. But if you have less on that one payroll, this is very critical, then you could only get up to 74% of your loan forgiven. So it's critical that that FTE on that payroll is as close, frankly, to these reference periods as they can be. Okay, so now comes this is where you put in your actual loan. In this example, 147,000. This example got, and now you can list out the payrolls. You can put your actual dates here if you want. So you can put the May, 7th payroll will be fine, and then you can indicate here whatever you wanted to do. So I'm just making this up here. So let's say these would be the payrolls during that period of time if you did it weekly, and we just arbitrarily put $7,500 here. Didn't put anything here as of yet. And then this would calculate how much payroll you're having during this covered period of time. And that's going to be a very important percentage. And this percentage, you want to try to shoot for 75% or more in this example. So this is where you have payroll for employees making less than $100,000 a year. Here's where you have payroll that you're making for self-employed or partners only that are equal to or less than 100,000. So with both of these, you would, if someone makes over 100,000, they would still be in here, but they're capped up to $100,000. So on a weekly payroll, 100,000 is $1,923. Unfortunately, I know that by heart at this point. So you're capped at that. So if someone makes $2,000 a week, you only put 1923 here, not the full 2,000, because that's all that applies to this cap here. Okay, and this column here is separate for partners in LLCs or sole proprietors. We just separate here. If you're a owner of a corporation, you would just put it here because you'd be in normal salary. So that's just how this model works. And here are these are other things that are included: cash tips, or if you have vacation pay, health benefits. These are health benefits only that the employer pays, not the employee's portion. So if the employee pays a portion of the health insurance, you back that out of this amount. Same with retirement. It's only the employer's portion. And this is the amounts that are actually earned and paid. So if this is a 2-month window of time, this would be the retirements over a 2-month window of time. If you didn't pay last month's or last year's and you're paying it during this window of time, it does not count. Okay, it's only 2 months worth of these things. All right. Also, some state taxes here, relatively small amounts because it's only state and local taxes, which it results in a very small amount in most cases. And if you have separation or dismissal pay, that would go there too. So you would add that all here. So if you added items here, you'll see these dollar amounts go up in this model and start building towards this goal here. And again, you're trying to achieve 75% here. This is so this is 75%. These are non-payroll expenses here, which includes things such as rent, mortgage interest if you own the real estate. So if you own it, you're probably going to have mortgage interest as opposed to rent. But this rent is not only real estate, it's personal property, and mortgage interest relates to real property, but it's other interests as well. And also you can include utility bills, and utility bills include electric, gas, water, transportation, phones. Transportation is really the odd one here, right, as far as like what doesn't seem appropriate. There's not been a lot of specific information on it, but transportation is seen as business vehicle costs. So if you're an electrician that has a fleet of trucks here, that could be a big number here. If you're an accounting office, the number's rather small. So right now, the understanding is that that includes fuel costs for transportation vehicles, which could be a real big number for some people here. I expect more clarification on this as time goes on and frequently asked questions, but as of right now, that's what we know that number to be. All right, and then interest is on any loans, lines of credit, any other loans that you might have, as well as rent is on rent or leases of any personal equipment you might have. So that's not only real estate rent. Right, so they broadened that in the last when the application came out, they broadened the definition of those things. All right, so in my simple example here, you had $147,000 in PPP loan. You paid out payroll of $61,500, which is roughly 42%. You had other expenses here that was set, then at $26,000 ended up being 17%. We have a calculator here that determines that $82,000 of your $147,000 loan is forgiven, and you have to repay $65,000 of it in my example, right? And that repayment starts 6 months from the end of the covered period, so it's roughly October, and you have 18 remaining months to pay, right? It's a 2-year loan. First 6 months, you pay no principal and interest. Then you start 6 months out and you pay the balance over the remaining 18 months is how it works. Okay, so that is how it works. Now, if you had, let's assume that your payroll was higher so that you were able to cover this here. I'm going to have to go higher. Let's just go. Let's go 15,000. All right. So let's assume this was your payroll. Here, now you're over the 75% mark, right? You want to get to at least 75%. Now all of your PPP is forgiven and nothing has to be repaid back. And what's nice about using a tool similar to this is you could see along the way how you're progressing here. Some people have asked, well, can I pay out hazard pay or bonuses and things of that nature during this window of time? Absolutely. The only stipulation is you can't pay out more than $15,384 here to a particular person, because that is the limit that you could pay per person during this 8-week window of time, right? That translates into that 100,000 limitation here. So barring that, you're absolutely fine to pay hazard pay or things of that nature. So that is the tool that we've kind of put together. This is version, I don't know if you can see the header here, this is version 4. There's absolutely going to be a version 5 after whatever gets passed, and probably a version 6 if I were to guess. So this is as of the law today, but things could change, especially based on what's being proposed. But I would suggest using a tool like this because it gives you an idea. What clients are doing is they're putting in their actual as each week or each biweekly period goes here, and biweekly you would just skip over here, and then projecting what the balance is, so they have visibility as far as how things are pacing out. Okay, so that is the tool. I just want to say, in conjunction with this tool, I also do recommend, and it's outside the scope of this PPP specifically, but it's kind of, consider it a bonus here, using a cash flow type tool, because some people can be so fixated on wanting to maximize this forgiveness that payroll gets higher than really the business could support. So I would suggest using that PPP tool in conjunction with probably some sort of cash flow forecast tool that you have. This is a very basic one that I just put together for illustration purposes, where you would look at what your balance was in your account at a particular time. You would add what deposits you're anticipating, and obviously that can vary greatly from what you're used to, depending if your business is still forced to close or you have modifications and such. And then you would put here what payables and expenses you have, and it just give you an idea in a very simple way what your cash balance intends, where you intend to project where your cash balance will be. This is just support, so you can put details here as far as payables, and it rolls up to that. So if you put 1,000 here, it'll change that to 9, and then everything changes with it. Payroll as well. So this would coincide with the PPP to see how much payroll you really should or could pay out and still not drain your cash, because this PPP loan is really intended to be a bridge in order to help you get through this period of time. And if people use it unwisely, then it's not going to last as long as it really should, and potentially can help you but only have short-term benefits as opposed to longer-term benefits. So a tool like this, a cash flow type tool, coupled with the PPP one, I believe would be extremely helpful in having business owners understand how things are going. Now, this number is anyone's guess for a lot of businesses because it's changing so dramatically. So the real challenge for business owners is predicting the future, right? Especially those who are not allowed to open or open with really strict limitations. It's been very difficult for them to project the future with that. So that's why this tool needs to be in front of you and updated weekly at a minimum, and then you would update that in conjunction with this. And I think between the two of them, you have two very useful tools to help give you visibility with all the other business decisions you have to make here. With it, you need to have an idea of where you stand as far as the cash flow, because that is very critical. And it's hard to predict if there's going to be additional loans out there. And obviously we've gotten, I'll use the term desensitized to asking for loans, right? People who have never had to borrow before, maybe in many years, going back to maybe when they started, all of a sudden are now programmed to borrow as much as they can and such. And it's really changed the paradigm of many business owners during this short period of time. I think that it can be dangerous if you don't understand that this is hopefully a relatively short-term crisis in the life of a business that needs certain strategies that are only temporary in nature and need to go back to the fundamentals afterwards, right? As much as people think this is going to be the new norm, it's not going to be the new norm, right? You're going to go back to it once things calm down. This is getting you through a hump, a real terrible crisis here for many business owners. And once it does, the fundamentals of your business are going to reappear again, right? So business owners or businesses that were struggling going into this are struggling through this and are going to struggle afterwards, most likely. And businesses that were strong and sound at the beginning of this will weather this and then reemerge strong and sound again for the most part. Although I do feel bad for restaurants and retail because I think they've been just handed a raw deal with the nature of the restrictions that have been placed on them. So they're going to have a deeper hole to get out of for sure. So that's the two tools that I would strongly suggest that you look at. All right. So we covered many of these things. These are things I wanted to highlight. The seasonal business thing is one thing I just want to cover real quickly because, again, I want to be mindful of the audience here. There was about a week and a half ago, kind of losing time, sense of exact time here, where there was a modification to the base period in which you could, as a seasonal business, could apply for the PPP loan. And there was that secondary or tertiary rush as far as trying to get an increased loan. That period for many of the banks has now passed. So if you're a seasonal business, they increased the period of time from May 1st to September 15th, as opposed to going to, I believe it was June 30th. That allowed seasonal business owners to be able to be eligible for bigger PPP loans. There was just one stipulation that the lender, this is the bank, didn't file this form 1502. This is all foreign, I know, to many people, frankly, including myself. These are all internal forms here. That period has just about closed. And some banks, like I know was with PNC a couple of days ago, they've stopped it. Each bank's a little different. If you are looking to or still considering to apply for a bigger PPP loan, I know I'm going backwards here because we're talking about forgiveness, you need to do that because this is the last really, if it still exists, it doesn't have much time. I did want to point that out again, given the nature of what a lot of businesses are probably going through here. Back to the agenda here. So we just covered the forgiveness application, the planning tool, and the forecasting tool. Again, I want to be mindful of my time here. Let's talk about this legislation because I think it's probably going to take me more than 5 minutes to go over it. So I need to, I'm just going to launch an email that I got, and I know there was a flurry of things that came up as recently as last night. So I just grabbed something last night that I saw in order to give you an idea of what is being proposed. I'm sure more has come out since late last night and early this morning. I just don't have it in hand, but I'm going to show you what I do have. Alrighty here. Second, yeah. All right, come on. Okay, so here I just grabbed an article that came out from a business journal, Washington Business Journal, and I highlighted some things that I thought were noteworthy here. And this came, like I said, late yesterday and such. So let's go over this for a couple of minutes because this is critical, and I tried my best along the way to tell you what was going to change, but here we'll cover anything that I might not have mentioned. So they're just highlighting restaurants and retail here, but obviously this will apply to everybody. The House passed a version late yesterday. Now the Senate has to look at it, most likely make changes or propose their own version. They go back and forth, then the president signs it. That's the way that the process has been working and works normally in Washington. And there's sure to be a lot of finger pointing and name calling along the way because we need that kind of reality entertainment here for sure. So so a couple of things of note here and why I highlighted things. This passed overwhelmingly, 417-1 in the House. So that tells you the strength and the sense of urgency that these legislators feel needs to be put in place relating to PPP. Why now? Why the sense of urgency? Because, this is my take on it, because some of the early applicants there got their money in mid-April, like April 13th or so. Well, 8 weeks out takes us to mid-June. So we're about 2 weeks out for those people following the law that's in place right now. So if there's changes to be made. Those people are 6 weeks into their 8-week period, you know, and if you recall the tool that I sent out, you know, they have a certain plan here in place and such. So those people especially need to know as soon as possible if there's changes, because that might impact dramatically their business decisions. So that's why the sense of urgency, and something's going to happen quickly if anything at all. And I think something will. Again, when something passes 417-1, that tells you there's going to be a change here. Here's another warning that I thought was mindful, is that, or insightful, is that it says here we're at the 35-yard line, saying that, you know, this isn't a done deal. So everything I'm going to go over with you, don't go back and say, oh, it's changing to that. No, it's not. It'll evolve, and there'll be some changes here as well. And then here is, I didn't highlight the whole thing, but here's just a little highlight again that I grabbed last night. There's probably, and I'm sure there are more provisions, but this particular article highlighted these, so I will as well. So this cover period that I've been talking about and saying it's 8 weeks, which is what it is now, they're proposing 24 weeks, or to the end of, or until December 31st, I guess whichever comes first. I'm particularly doubtful that it'll go that far out, but who the heck knows? I've definitely, I can't predict what's going to go on in Washington, but I've heard 12 and 16. If I'm betting, I think it's going to be 16 is where it's going to land. So this might be just, hey, we'll ask for 24 and settle for 16 type thing. All right, remove the limits on loan forgiveness for small businesses unable to rehire. So to the same level. So these limits are what they're talking about as far as time limits here, as far as being able to rehire versus a period of time. So this will go in conjunction with the covered period. They're saying that they're going to allow more time for business to rehire, because there is a fair amount of businesses, and I'm sure many of them are on this call, that haven't been able even to start ramping up, or if they have, they had a little spurt here in with Memorial Day, and then they're going to ramp up to 4th of July. So many of them need that additional time. So they're looking for relief there. And again, I didn't say this, or if I said it in the beginning, it's worth saying now. All this is pro-business. So this is all good news compared to what I just gave you is where we're at today. Everything here is all good news. Okay. Expand the 25% cap to use PPP funds for non-payroll expenses such as rent, mortgage interest, and utilities to 40%. So remember is what I said here, and probably best just to plop this up here, where this needs to be 75% at a minimum and this 25% at a max. They're making this that it only has to be 60% and 40%. That's what they're talking about here. And that comes into this calculation. So that's what they're referring to when they say that. Okay. Okay. Allow small businesses to take the PPP loan, also qualify for separate tax incentives. There are a number of tax incentives that were put in place by the IRS, right? There's different bodies who are trying to help out here, and some of them are tripping over each other, right? The whole state with the unemployment is tripping over this plan because they're giving these $600 a week PUA add-ons here, which is giving incentive for people not to work, but yet we're trying to have incentives here from the SBA to get people back on. So some of these programs are in direct conflict with each other. Well, this is from the SBA slant, is they want to try to make the benefits that the IRS put together there, which had tax benefits relating to payroll incentives, to be effective. And what happens is, the way the law is right now is that if you get a PPP loan, which many of you have, or many people have, those tax incentives, there's an employee retention credit, things of that nature, are not applicable. You don't qualify for them because you got the PPP. They're asking here, make it where you could still get those qualifications, which allows you more time to pay your payroll taxes, basically, in a nutshell here, even though you got the PPP. And right now they're saying if you got the PPP, you can't take advantage of it. They're asking there, let them get both, or they call it double dipping here. All right. Extend the loan terms for the unforgiven portion that need to be repaid from 2 years to 5 years at 1% interest. So as I mentioned, you get 6 months interest free, and then you start paying over the remaining 18 months to get to 2 years. They want to make that 5 years, again at 1%. That again, very pro business. Gives small business owners more time to rehire due to social distancing and such. And again, this ties into giving you more time to hit that number. Right now, you have until June 30th to hit that FTE. They want to give you more time to rehire the particular the employees to get the full 100% benefit. That's what they're talking about there. And then the last one is extend the time to actually compute that 11-page form. You have 6 months not only to compute it, but to give it to the bank that you're dealing with, have them process it and get back to you. No one knows how long the bank needs, but if it's a 6-month period and the bank says, hey, I need 2 months, then you only have 4 months. Some people are asking, hey, that's too small, especially for larger businesses. We need more time. And they're asking instead of a 6-month window after your cover period to a 10-month window. Again, all pro. That's not really necessarily financially pro business, but it gives you more time here. This is just a highlight. This is intent to fix some things and continue modifying things, because obviously the original legislation came out thinking that this would end a lot sooner than it did. As this thing drags on and there's more limitations and restrictions, they're scrambling to try to make this thing more flexible and more accommodating, but still staying within the same concept of this PPP forgiveness model. And that's why you're seeing a lot of this patchwork or updates that are in place here. Okay. We only have 9 minutes there. I was hoping to leave 15 here. I tried to cover as much as I could with it. So I'll stop there. Again, if you need more, let me know. If you need more clarification here, I'll flash my, here's my email again with it. So we're up to the Q&A part. And one thing I do want to point out here in the Q&A part, the SBA has their own Q&A. It's called PPP Q&A that they issue, and it's come out every few days. This is the latest one as of 2 days ago. This is a great resource to answer specific questions. It's up to 17 pages now, but then when a new version comes out, what they do is they just add to it and then put a footnote. So they'll say question 19 was added on the April 8th revision of it. So again, it's being revised multiple times a week, but this is a great resource. So if I don't cover an answer, if I don't get to your question or you need more clarification, this is a great resource. You get it right on the SBA's page. It's a bunch of Q&As, so it's a nice, easy format to read it in. I highly recommend you have that and maybe bookmark it so that as new alerts come out, you'll have it. This is where you'll get more clarification on transportation and all those other implementation questions. All right, Nina?
Okay, I think I'm going to take it, Lou. And we do have a couple of questions from the chat, and I see some hands raising. So let's go to the chat first. The first question is someone saying that their understanding is that the covered period begins on the date of the loan funding. However, it took about 6 weeks for the loan application processing and eventual funding. Is there any provision for allowing the covered period to be retroactive, say to the application date, to cover the payroll during the time between the application and funding? And they're an independent contractor and sole proprietor.
Yes, so there's no talk or no provisions in the Q&A or in any discussion here to go back. Most of the people are asking, can we, extend the period of time? If I'm understanding the question, and I'll just use this simple example here, can you go back to, let's say you applied for it on April 1st, but then got it on May 1st. Can you go back to that April 1st to May, in this case, May 4th period? The answer is no, and there's no provisions, there's no talk of it. So no, there isn't any, anything that happened there does not come into play in the calculation.
Okay, next question is, where do you find the FTE calculator? the full-time equivalent
I'm sure if you go online, you can do that. We created our own simple one over here, and that's basically just taking the payroll periods for the designated 2 periods that they allow and counting how many hours. And here's an important thing, and I'm glad that question was asked. SBA historically does everything on 30 hours for an FTE. However, because the SBA is doing it in conjunction with the Treasury Department, it became 40 hours. A lot of my talks, up until whatever, probably a week ago, was all about 30 hours FTE because that's the SBA. It is 40 hours. So you could either calculate it on your own, your payroll service would be able to help you with that, or you could do a simple spreadsheet like that.
Okay. The next question is, we received the loan on the first round. However, we were placed out and had to downsize home workers. Are they lenient at all if we did not get back to work until later? We now have all of our employees back.
Okay, so the all employees back is real critical to what I was harping on before as far as this June 30th payroll. You want to try to get as much employees as you can back here, so in order to get to 100%. The fact that there was a ramping up and people were gradually bringing their workforce back, right? It's most likely it didn't look like this in business, and maybe it looked more like this, you know, and then kind of ramped. That's how most businesses kind of got eased back into it. And I think this person's asking, well, because of that, at the 8-week period, I'm not at my max, and therefore I'm going to fall short of the 75%. And the answer is, yeah, there's no makeup. What this legislation that they're talking about is going to do is not make it 8 weeks. You're going to have 12 or 16 or whatever number of weeks, and because of that, you'll be able to make it up that way. So right now there's no relief, but I would be very confident that there will be.
Okay. This one says, I'm getting mixed advice about selectively offering COVID impact bonuses and forgiveness for those.
Okay, I don't know the mixed advice they're getting. I'll tell you what you can do, all right? And I think I alluded to this before. You could call it COVID pay. People have selected to call it hazard pay, bonuses, whatever you want to call it, doesn't really matter. Okay, so during this 8-week period, you can absolutely pay bonuses out to whomever you'd like. However, you just need to be mindful of this $100,000 a year cap. So if it's someone who's not at $100,000 a year or even close, then you're absolutely fine. Pay it, and it absolutely 100% qualifies. However, if there's someone who was getting, remember I said that 1923 is that cap. So the 1923 a pay for 8 pays is the most you can do, and that totals the $15,384. So if you have someone who's making, let's say, $1,000 a pay for 8 weeks, that's $8,000. They can make up to the $15,384. So in that simple example, you could pay them $7,384 in a bonus and still get 100% included there. So just be mindful of that $15,384 cap per person, and you're absolutely fine.
Okay. Okay, I see that Emily has a question. And let's see. Emily, go ahead. You're unmuted.
Okay, great. Just as an example, if we got our loan on April 27th and our first payroll was May 1st, but we pay in arrears, so that May 1st payroll actually covered April 12th to April 24th. Can we include that? I mean, we paid it after we got the loan funded, but the time worked was prior.
Yeah, so this is how it should look. If you could look at the screen here, you got April 27th your pay, and this is one of the changes that came in place when they issued the actual application. This is that alternative payroll period. I alluded to it, but I didn't really elaborate on it. So I'm glad you asked the question. It gives me a chance just to elaborate a little bit more on it. So in this case, people felt there was winners or losers, right? You got the money a day after that payroll period. You got cheated out of it, right? If if you got it a day before, if you got the PPP money a day before the payroll period, you were lucky that way. And they wanted to remove all that. So what they say now is you can go in the first payroll period subsequent to that. So if you got it on April 27th, as I have on the screen here, the first payroll period, well, this is the beginning. So you could do the payroll period starting May 1st till whatever, I guess the 9th is there, would be your first payroll period here. And in this case, see, even though your period ends on June 21st, you're okay to include the June 27th payroll because you're allowed to get 8 pays in. And the fact that it came not exactly when your payroll period ended is no longer a problem. It was thought to be and no longer is.
But can we do that one going back? Can we still, like if we paid, say, hazard pay, so anticipating that that would be included in our loan forgiveness, can we keep with the original, like not use the alternate
Yes.
plan?
Yes. Absolutely. You can use one or the other. It's just you have to pick one and then stay with it. So if the other way worked better for you, use it.
Okay, even though the time worked was before the 8-week period.
That's right. Yeah. So if you use the regular, the non-alternate plan, then your pay would be I don't know the exact date, but I'm just going to put that here. Then you can't double dip and say on the back end, oh, I'll stay on, you can't squeeze out a 9th week out of it by playing.
Right, as long as we're paying for 8 weeks.
Exactly. Right.
Okay, thank you so much.
Okay, so I don't see any other raised hands or any other questions in the chat. So Lou, I think that's going to wrap it up. We are right at 11:01, so perfect timing. I don't know if you have any final comments you want to make, but it was a great session. And on behalf of the chamber, I'll just say thank you and just let you have any final remarks.
Really just thank you again for having me on. I'm happy to do it. And if in the future you need an update, just feel free to ask. And again, things are changing so much. Again, just what I mentioned in the beginning, I would echo, just stay on top of it because the nature of things changing. I know business owners have many different things to focus on. It's just important to kind of either focus on this on your own or have somebody help you out with it because it really is something that is still evolving. And it looks like all the changes are good, but still there's windows of opportunity. So you want to make sure you don't miss it. Right.
Thank you so much, everyone. And again, Lou Bongiovanni with FBK. Folks, we do have another webinar at 11:30 on for opening up shore rentals. House rentals, condo rentals, hotel, motel, and camping. You can sign up here at the last minute if you'd like to do that. Please do. And then, of course, more programming next week. Thank all of you for joining us today and wish you a great weekend. And we're getting through this. Hopefully, we'll get all businesses opened very, very soon. Thanks so much and have a great day.